Emerging market stocks slipped a while the gauge of currencies edged higher as investors awaited the outcome of key central bank meetings with a slump in commodity prices. And this is based on worries about demand in China. And that's kept sentiment quite cautious. In the U.S. futures are up as investors hope for clues on the timing of interest rate cuts from this week's Federal Reserve policy decision, which we're expecting tomorrow. We're also having caution creeping into the market ahead of the day's big tech earnings and jobs data. All eyes are on quarterly earnings from the tech giants, which have largely supported the U.S. stock market's record-breaking run since the start of the year, to see if their overstretched valuations are justified. And the stocks have the potential for further AI-led equity rallies. A key employment report is also due after the markets open, along with Friday's non-farm payrolls reading. And this is expected to help investors size up recent data, signaling a loosening U.S. labor markets. Looking at the all-share index, up 0.2%, financials up 0.6%, industrials also in positive territory, up 1/3. Resources in negative territory, up almost 0.5%. Looking at the rand, trading at 18.31 to the dollar, 19.83 to the euro, and 23.54 to the pound. To help us unpack the markets a bit further, we are joined by Patrice Rousseau, the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. It's quite a busy week, and I'm curious, when you look at what's happening on your screen when it comes to that financial market performance, how are you making sense of market sentiment and the drivers of that sentiment?
Yeah, very good question, Anastasia, and hello to you and to all your viewers. It is very much the points you've already touched on. The South African stock exchange really gets influenced by a number of global and local factors. We're seeing the resources under pressure. You spoke about the Chinese pressure, especially when it comes to the property market. We're seeing the big diversified miners all down by over 3% during the day. So that's a big story driving down one part of the market. On the other side, you have financials up by over 0.5%, and that's really on expectations that we are soon going to be in an environment where central banks are going to cut rates. Obviously, the Federal Reserve is the bellwether. They're the big gorilla in the room, and it's expected that maybe not at this meeting, but at the next meeting on the 18th of September, that might be the time they decide to cut rates. So it's different forces pulling in different directions. That said, the JSE is up 31 basis points, despite the fact that we've had quite a sharp sell-off this morning on the Asian side.
Okay, cool. Let's stay with things on the JSE. Shoprite released an operational update. That share price is up 1.1%. What did you take away from that as you go through that update?
Yes, that's a good point. It was up a bit strong on release of that update, now up 1%. Very strong revenue growth of about 12%. I think what we get from this update is the fact that volumes in the South African supermarkets are up after coming under pressure. They're expanding their franchise network. So again, they're gaining market share. So if we compare them to, say, Pick n Pay, I think they are stretching their lead. And despite the fact that they've had to absorb 94 mass-mart stores, so really they're expanding, but at the same time, if we look at the performance of their stores, they are able to still deliver strong growth. They're keeping inflation under control at 4%. So that also in the constrained environment is good for the consumer basket. And I think in terms of other segments also, we're seeing a number of the other segments doing well. They've opened, for instance, 73 OK franchise stores, a 14% increase in the base. So all around, they've been cautious. There's cost savings, but they're not forgetting to increase their footprint and gain market share. So a dominant position which is getting more dominant every 6 months of the year.
Sticking with market share, at some point this year, we're expecting Pick n Pay to list its discount retail chain Boxer. How competitive do you expect that space to be between Shoprite and Boxer, especially for that lower end income segment?
Yeah, it's a very competitive market. As mentioned, Massmart struggled there with the Cambridge stores, but it's going to be a head-to-head. I think Pick n Pay in the Boxer, with their Boxer stores, it's really the jewel in the crowd. So that is going to be an interesting head-to-head, which is why I think we're seeing Shoprite also expanding their footprint so that they don't leave any open areas or open regions to Pick n Pay. So this is going to be a very interesting head-to-head. And bear in mind that Spar also is fixing its businesses, and I think it's also going to get their act together. So it's going to be extremely competitive in that area.
Let's move things stateside. We're in a week where we're looking out for tech earnings from the likes of Microsoft, Meta, etc. What are you looking for?
Yeah, their tech earnings, I think the Mag 7 are going to deliver strong revenue growth, probably around 14% odd, so mid-teens. Earnings will be double that at 27, 28%. But it's really a mixed bag. So I think one has to be quite cautious as to how to interpret. I think we expect Amazon to lead really with probably a 60% plus increase in results. Yes, it's done well. It's already up 21% year to date. But what we find is businesses who are investing a lot in cloud are likely to do very well in this current round of results. Also, Facebook holder Meta also expecting quite a significant jump of earnings, probably up 45%. On the downside, Apple, which is likely to be the one of the Magnificent Seven likely to post earnings down, where it's driven by release of new products, which we haven't really seen for a while.
All right, Patrice, thank you so much. Let's leave it there. That is Patrice Rousseau, the Chief Investment Officer at Ashburton. And on the back of what he's just said about Apple, they are releasing their Q2 numbers. Analysts are going to be looking at ad sales, and that's expected to be driven by the Olympics ad spend as well as elections. But we'll also be looking at whether they bet on the AI aspects of things are actually starting to yield results. So we'll unpack all of that as the week unfolds, or rather the days unfold during the week.